Hello, viewers. This is a recap of Module Zero of the beginner to trader, and Module Zero covers the trader's journey. So, in this video, we're going to look at a typical flight path for someone picking up trading, and the general progression that they will go through, experience the ups and downs, and what reality really looks like in terms of what is the true cost of investment and setting up your trading business. And so this kind of dovetails into other videos like trading, running your trading like a business, and other bootcamp videos, which I'll share a few of those in time as well. But let's have a look at the basic trader's journey. So just looking at some published statistics that are out in the general marketplace. So according to Manish Patel, who's a quite a well-known investor, mostly in the kind of the runs a hedge fund and more of a value fund. So according to him, only 2% of retail investors consistently make money. So consistently means basically means you're profitable year in year out through thick and thin. And then according to Trader Magazine, very widely read publication, according to them, 95% of new retail investors will blow their accounts within 2 years. So neither of those look very encouraging, especially when you look at all the advertising and the pomp and ceremony surrounding, you can make a gazillion percent by following their systems and patterns. So moving on, and there are, according to psychologists and learning methodologists, there are 4 stages of learning, and you can kind of visualize, like when you took up learning how to drive a car, and if you kind of take your mind back to your first lesson and prior to your first lesson and that progression, you first get in the car, you know nothing about what to do and all the what the dashboard is, the instrumentation, how to move the gear stick, and how to maneuver the car and all that kind of stuff. So through guidance and practice, you move from unconscious competence to conscious competence. So now you have kind of a checklist and a route, and then you're saying, put the key in, put your foot on the brake, turn on the engine, and then run through your checks. So look behind you, before you move off, and look up your shoulder, put the car into gear, and then move off slowly and safely into the driving mode. So you go through what looks like an awkward progression to conscious incompetence, which is now you kind of just get into your car, you kind of already know how to do that. You're driving with a lot more awareness. And if you think about where you are now, most people, are doing all sorts of stuff in their car, drinking their coffee, driving one-handed, and they kind of know where they're headed, and they just intuitively know when to put the brakes on and how far out, and they've got a good read on the car, and able to handle their driving safely and effectively and efficiently. But that took a progression of skill and repetition over time, and that's the same path that anyone goes through, no matter what the endeavor is. And so, in terms of emotional intelligence, which is a big piece of the trader's journey as well, the key takeaway here is that the little boy represents the conscious mind, and the elephant represents the subconscious. And it's not an even battle. The subconscious mind uh, directs what really happens to you and how you react. And we kind of know that by, if we look at the next example, right? You see, you buy a stock at $100, and next day it drops to $90. And then your conscious mind starts to make stuff up. You may run your loser tape, which emanates from your subconscious mind. As the losses are mounting, you may go through the Kubler-Ross 5 stages of loss and grief. You go through, blame and guilty, anger, frustration, question why me. This is always happening to me, and you kind of check out the process, and some people just check out of investing or trading at that point. But the fact is that the stock is 90. The only thing that happened is you bought at 100, and now the stock is at 90. So those are the bookends factually. All this other stuff was, emotional intelligence at work, and in this case, poor mental programming. Okay, so moving on, let's take a look at typically, if you look across history and cultures, there's some consensus in terms of what it takes time-wise to get to kind of a master level of craftsmanship. Greek mythology is known as the creative muse, and they talk about roughly 10, 20 years. Chinese folklore talks about 10,000 hours. Confucius, medieval Britain, it was a 10-year period to get to craftsmanship from apprentice, the journeyman to master, and then up to a master craftsman. Malcolm Gladwell took those notions and then wrote his book Outliers, which he talks about 10,000 hours borrowed from those first three forms. But the question here is there a way to accelerate the learning path? And we will look at that in a few slides. So basically, one of the key takeaways is that in terms of probabilities, not dissimilar to golf and the attrition rate in golf. In golf, it's widely known that most people, the average person playing golf, cannot break 100, following the rules, and very few people can actually break 90 or even bogey golf, especially when you equalize the golf and you're playing from the tips, which is the black tees, which is what the pros play for. So if you play from the tips, then chances only 5% of golfers can even break 90 or best bogey golf. And so here we have an excerpt from a book written by Wyckoff, which kind of parrots or paraphrases Livermore. And in this book, written in 1935, he writes that one should realize at the outset that the work requires the same study and preparation as law or medicine. And that certain rule applies to it, to be studied as closely as if he was a law student preparing for the bar. Many people attribute my success to luck. Fact is, for 15 years, I've studied the subject closely. You might say I've given my life to it, concentrating upon it and putting into it my very best. So here we have a stalwart of trading history who is admitting that it took them 15 years. And these days, people are bored with the effort or a system that they pick up after 15 minutes. And so it takes a lot longer than that. But most people that we've interviewed and spoken to, most of them sit around 8 years in terms of 7 to 8 years is what the kind of the mode average is. And so here's a path that was spoken by the late Bill O'Neill at one of his seminars that was attended. So basically, this was the path that he laid out, and he was saying that year one, the newbie trader, can experience losses between 30 to 50%, and as they, improve and learn and get better, then year two, they've reduced portfolio, but now their losses can be between 20 to 30%. Year three, slightly smaller portfolio now, but 10 to 20% losses. But so they are growing because their losses are decreasing. And then by year four, the losses may be closer to between -10 and -5, may even break even in year four. And then year five is when the average trader will turn the ship around and start to get profitable and start to show returns of 5 to 10%. And then thereafter, they stick at it, they can start growing that and start looking for compounding 20% growth rates. So by the time you get to year 6, 7, a good trader should be able to achieve around 72 to 100% returns per year. So a successful journey. So let's look at a paradigm that after studying all of this came to in terms of having analyzed and interviewed traders as to where their experience was. And so we came up with this 5-5-50 formula. So let's take a look at that. And so for any system that you select, the price is the same, but the time may vary. And so the price is, kind of, it takes if it takes 5 nights per week, at least 2 to 3 hours per minimum. It takes 5 years, assuming you follow one, yeah. And then it takes approximately 50,000 in market tuition, tool costs, or education. So that is the real investment side of trading. And if you can take a look at any major popular national system out there, and just take a look at what it takes to go through their educational programs, the cost of those, and then how they're delivered. Pre-COVID, it was mostly delivered at hotels, and so you can add hotel costs and food costs and travel costs for unless were lucky to live close by to the venue, and then add to it the tuition of the lectures, the seminars, the books, and all of that, and that's before you even start trading. And then if you also factor in some of Bill O'Neill's losses in the early years, you'll easily get to a number at 50,000 or north of it. So in addition to the investment and the effort, what else does it take? You require a good coach and a mentor. Really, not to show you so much about how to trade, because you'll learn that through the system, but it's really the emotional intelligence side and the psychology of trading. And a good coach and good mentor will show you how to get out of your own way, how to become much more rules-based and fact-based, and reduce your emotional side. It's uncanny or coincidental that the field of trading is very similar to the field of golfing in terms of the statistics and the attrition and the expectations. I mean, people come to trading with a mindset that they're going to make millions overnight. That's akin to a new golfer basically going to the driving range and then entering trying to think that they can win the next Masters, right? It's not going to happen. So, and part of the process of becoming a good investor and trader is the journey itself. It's the man that makes the money that makes the man. Okay, so this is a quote from Victor Hugo, French poet, that one thing stronger than all the armies in the world, that is an idea whose time has come. So is there an idea out there that can help us to beat the 5550? And lucky for us, there is. So there's a study by Hugh Lang, who's looked at crowdsourced investing, and he applied the strategy of crowdsourcing to see if that was favorable to investing, and could a crowdsourced investing strategy outperform an individual. He looked at many endeavors, including the study of Deep Blue, which was IBM's computer, and how a group of young chess players were able to beat the computer, and also how in a similar fashion, then they were also able to outperform established chess masters. So the bottom line here is that collectively a group can outperform an individual. Was on past experiences, analyzing the counsel of others. By harnessing crowdsourcing to an investment advice, you get to better selections, etc. Historical data plus crowdsourcing data has pointed to higher performance. So there's been studies around this. And one of the things that he noted was that hedge funds getting data feeds from over 500 million Twitter feed accounts, and they're processing them using their super great computers, and looking to see where the money is flowing based on chit chat on Twitter. And in Japan, there's an ongoing study where over 55,000 users collectively have used this strategy for trading, for active traders. All right, so just some key takeaways that basically, to sum up his work and his ideas here, that a massive generalist can have collective intelligence, which is greater than the smartest person in the group, and that the collective information is leads to better performance and results, and basically that shouldn't really bet against collective intelligence, is that has proven to outsmart the individual at individual level. So that's a way that we can circumvent the 5550. And so I've shared with you the trader's journey. I've shared with you some of the statistics that it takes to become successful. Shared with you kind of the timeline that you can expect, and most importantly, I've kind of shared with you what the true cost of becoming a successful trader is, both in terms of timeline and in commitment. And so finally, the key takeaway is that by being part of an organization slash group, or whether it's even just a meetup or an investment group, ju- just through that process, you can accelerate your own learning and you can accelerate your performance. Okay, so that's the trader's journey in a nutshell. Thanks for watching. Thanks for listening. Goodbye for now.